We are in Lincoln at the Nebraska Farm Bureau's Ag Edge Conference, and we have some of the speakers who have been here with us today. We're going to start off here with Dr. Cory Walters. We're going to have two UNL Ag Economic professors talking to us today, but you are more on the crop side, Cory. So one of the first things you said starting out was we're going to kind of forget about $8 corn as we're going to look ahead for the future. Why is that?
You know, whatever we benchmark against influences our feelings about the current prices. So we don't necessarily want to go back in time and look at that $8 and say, wow, they're down quite a bit from then and get depressed about it. You can also go back a little further in time and look at $2 corn and compare that to the $3.50 and say, wow, that's really good. Both of those are inaccurate. What we want to look at right now is what's the futures market telling us here into this upcoming year. We're sitting around $4.20 for December corn. You're looking at a price probability distribution around that futures price. You're looking at 10% chance of going below somewhere in the $3 range, and there's also a 10% chance of going above that $5.65 range. So there's a lot of uncertainty out there, which is what we want. There's the good side, which is the $5.65, and then the real bad side if we're a producer on the lower side. But nevertheless, that $4 range is where I would benchmark our expectations for this upcoming year.
Now, where do you expect soybeans to be for this upcoming year?
Soybeans, same thing. We're sitting a little under $10, and then that risk can go down, 10% chance down below $7.80, and the 10% high end, I think it was somewhere around $12.50-ish. I think is somewhere right in there. So again, the same thing, but yeah.
Now, we had a couple questions in the audience about crop insurance. We have some uncertainty now that the 2014 Farm Bill has been out. We've talked to some of the Farm Service Agency people as well. So what is kind of some of those things that producers need to be aware of those deadlines that are coming up this coming week and then into next month as well?
Well, I'm for the deadlines, for the decision, my suggestion is this, to take a look at the program and how it interacts with crop insurance and hedging, and find the combination that works with your risk management portfolio. Don't think of just the Farm Bill as its own individual silo. Think of it as how does it interact with my crop insurance? A good example of that is if I select a good, let's say what I think is the best decision on the Farm Bill, can I then buy less crop insurance because I have this essentially free program from or zero premium from the FSA office, or potentially even buy more? But think about how do they relate? And on top of all of that, make the decision from the risk side, not from the side of, well, this is how much I'm just going to get from the government. Think of it as, if things get really bad, where should I need income from so that I can survive?
I think that's really good advice for our producers and to the attendees at the Farm Bureau Ag Edge Conference, first one ever. We're also going to let Dr. Cory Walters here, we're going to let him go. He's got some other things to attend to today. And we're also going to talk with Dr. Kathleen Brooks, who is one of the other ag She is an ag econ department at UNL as well. So we're going to talk to you some more on the livestock sort of things. Why don't we start off with beef? We've talked about it previously before now, but what are some things that we're seeing now that after that January report came out?
The January report came out above pre-expectations. When we're looking at it, beef cow numbers increased. The biggest increases coming out of the southern plains, but in general in the U.S. we saw increases in beef cow numbers. But when we look at calf crop, cattle supply, inventory levels, we're still fairly tight supplies when we're looking at it from the feedlot sector.
As it came out also a little while ago that Nebraska has the #1 exports in beef here and also highest on cattle on fed. Going forward with some of those numbers from that U.S. report, where do you think we're going to go in Nebraska in this next year?
When we look at those cattle on feed numbers, we can get the monthly report as well. And what we typically see is those numbers between Texas and Nebraska increasing and decreasing between the two. The one thing we've seen for Nebraska when we look at cattle on feed numbers is if we look at year-ago levels, we're usually above year-ago levels and above what we've been in the average. So typically probably seeing some of those similar numbers again here in 2015.
I think anyone who's plugged into agriculture and is not just a producer but knows what's going on, whether you're a crop farmer or a livestock farmer, we had some issues with hog production this past couple of years with PED virus. Where are we going to see things go from here? What did you share with the producers today?
So, yeah, from the hog production side, we've seen some recovery there. Pigs per litter have been increasing. If we look at the December quarterly report out of USDA, it looks like we're expanding in the pork industry. So the expectation is as we go through 15, we'll see that production increase.
Was there anything else you'd like to share with listeners that maybe you shared during the Farm Bureau Ag Edge Conference?
As we look into 2015, from the beef sector, I think we're still going to continue to see the strong prices we saw in 14, but probably not see those linear trends we saw in 14. From the hog production side, as we start to go through 2015, we've seen some prices starting to decline and probably not see quite that strength here in 15. Part of that's because we are seeing increases in production. And the other flip side on that is the export market. As we go through 15, if we backtrack to 2013, we saw good export markets for beef and hogs. As we moved into 14, we saw, somewhat similar on the beef industry. And as we go into 15, we continue to see those strengthening dollar value, U.S. dollar value, and that may have some big impacts on both pork industry as well as the beef industry export markets.
And final question, considering those export markets, we're having those issues on the West Coast. Do you think that might affect any of the production or prices for this coming year?
It's going to affect the export market for sure. It's starting to get some of that backlog going. The pork industry may be being hit a little bit more than the beef industry at the moment. But yeah, it's going to have a factor as we go forward, especially depending on when it all gets settled.
All right, that has been Dr. Kathleen Brooks. She is from the Ag Economic Department at the University of Nebraska here in Lincoln. We are at the Farm Bureau Ag Edge Conference in Lincoln, and talking to us before Kathleen was Dr. Cory Walters, who's also from the Ag Economic Department. I'm Jessie Harding for the Rural Radio Network.